right into today. There's the couple things I want to do. I want to take a look at just quickly what's going on with rates. Everybody knows they went up when everybody was expecting them to go down. Let's touch on the why. I want to talk about affordability on some of the national articles I've seen, but then I want to do some city by city cruising around, and the chat is on. So if anybody wants us to look at a particular city, I want to look at some of the metrics by just a lot of cities in the valley here and see what's going on. And I can compare cities like from Gilbert to Buckeye and show some of the differences. But you can see it in the ticker down there below that, our mortgage rates are sitting there at 6.62, and our active listings went up about another 300. And it's because our new contracts are still lagging below our total of new listings, like about 387. So that just continues to add to it. And that 2564 you see down there, that has not budged since I don't know when. In fact, it's only changed on a 7-day moving average by 3 homes this entire week. That's 3, not this.
So Jeepers, that's crazy.
It just stays right. It's like they're all waiting here, and then, okay, your turn. Don't give me more than 2,500. And they go buy your house now. Next. It's like being at the
it's like
the line at the deli. So talking about rates, I want to jump into this I shared with you just a moment ago, and that is not your screen, mine. Go away. There we go. Right. Had mine. You're not up yet. You will be. Okay. Cromford says the majority of people thought that the mortgage rates would go down after the Federal Reserve cut their base rate 3 weeks ago. The majority have been wrong so far. Last Friday's jobs report suggested the U.S. economy was stronger than expected and added more upward momentum to interest rates. And that is what we've been seeing, right?
Yeah, pretty much. I mean, we've seen some stabilization the last couple of days. I mean, we saw the mortgage-backed 5% coupon. It was up 11 basis points today, but it's been kind of touch and go. The core CPI numbers came out this morning. It was 0.3 versus a forecast of 0.2. So that's like, okay, the inflation, maybe the fire's still burning there, because obviously everybody's been feeling that rates have been, like I said, we've been in this, as I've been saying the last couple months, we're shifting. We went 2 years ago, we were in this, how fast can rates go up? We're going up, inflation. Now, the last, since October, November, we've seen kind of a shift from inflation to, okay, how much are they going to cut rates? Now they're focusing on the job reports. So, I mean, the bonds kind of stabilized here. Okay, now let me see if I can pull up. This is these are prices. So the prices and rates move inversely. I'll try to move this around a little bit here. But this was right. Let's see. This is where they bottomed out. Let's see, October 1st. Obviously, we bottomed out rates, and we have seen rates have obviously gotten beaten up the last 3 weeks. We've lost about a half a point in pricing, which has been kind of crazy. Here's the Treasury, the 10-year Treasury. Let me pull this up a little bit, pull this out a little bit further. But this was just right before, obviously, the Fed met, and then it's been just a staircase climb up. We, from the 10-year, hit the bottom at 364, and now we're at 4.0. We're over 4%, 4.06. So it has been just it's been, I wouldn't say ugly, but it hasn't been pretty the last 3 weeks in terms of rates.
Yeah.
And I mean, you look back here, obviously, since this is back in October when I said we hit the peak. Back in October, I said I thought we hit the peak. Rates were coming down. Obviously, we saw an increase in April, and ever since then, we've seen a decrease. And quite frankly, you see, if you look at this rate chart, you can see where we have these fits and starts every 2 or 3, 4 weeks. We have these little periods where, the rates are down, rates are up. It's been very choppy on the way down. And I think, quite frankly, we've seen probably the peak, short-term peak, because you probably going to see some people coming in and buying bonds. But it's, for people that are looking to close here soon, obviously the last 2-3 weeks, it hasn't been. Now, if you've got a contract 2 weeks ago, it's like, this is where you kind of get stuck because you're like, crap, rates were at 5.996. Now we're at 6.5. That's where the client and the mortgage guy like, okay, do we lock? Do we wait till they pull back? If they go up any higher, you're kind of in this corner. So, but I've seen these periods where, like you said, the 2 to 3 week period where you see them go up, you see them go down. And looking longer term, I think, 30 days and out, we've seen this before where bonds lose ground, everybody gets emotional and the markets get momentum. You see the traders kind of trading on the data. We got the Fed's meeting November 7th, the day after the election. So, I think there's kind of a cap of how bad rates can get. We're probably close to it. There's going to be enough data coming out the next month or two, with the jobs report, the election, the next Fed meeting, and there's going to be more inflation data. I think this is just sort of a short-term kind of correction in bonds. So this is where it gets kind of dicey when you're buying a house short term and you're trying to lock it. You're like, God, I could have got 6 3 weeks ago. Now it's 6.5 because you lost, on a 4. Going back on the pricing, let's just go to my pricing chart here real quick. $475,000 purchase. I'm picking up Provident. They're the number one. This is my loan sifter right here. These are all the different lenders I have that I can pick from depending on service and speed and whatnot. Provident is the number one, for 475 purchase, 5% down, 780 credit score. Back 3 weeks ago, you were looking at, high fives. And this is kind of shows you how people, this shows people how things have changed. I was getting 5.996. You could probably get for $1,000, $1,500, $1,800. You can get 5 7/8. But 5 7/8 today is costing you $9,000.
Gee, that's a big difference.
Yeah. So now, you see here, 6.5 is kind of that $1,100 cost. That's kind of probably the sweet spot, 6.5, 6 5/8. But, so if you look at 6 5/8, we've gone up a good half a point. Like I said, 6% now costs you $6,700, where it probably was maybe $1,000 cost. So these are the short-term blips that drive people nuts, as far as what should I do? Because should I wait? Do they come down a little bit more? The momentum, this little short-term price swing, just like you said, it's just kind of aggravating as hell.
Yeah. I tried pulling up, looking at forecasts for mortgage rates for all of 2024. And I just kind of got dizzy. It's like everybody was all over the map. There were a couple that were spot on. Realtor.com, I thought, was the closest. But it just, again, it underscores, nobody can predict things out.
Yeah.
Far.
Well, this, like just that half, like you said, I think I just said a couple minutes ago, I'm probably repeating myself, but that change is about $180, $200 a month difference.
Yeah. Yeah.
So it does have a direct effect very quickly.
Bebop says Axial's weekly report today shared Arizona's up 70% year over inventory. Is this true? No, it's not. But that's because we're right at last year. Now we are up 70% probably from here, which is 2020 and 2021, or perhaps 2022. Let me look at these numbers again here. This is 2023. Okay. No, you know what? I stand corrected. We have tied with 2022 and we're above 2023. But the point is, looks like we've been here before. So, they like to, and I like Axios. He really, paints a very clear picture, but it's not an alarming number. I remember when we were down here and we were seeing these things that saying that inventory is up 36% and people are going, oh, here we go. I'd say, look, call me when we're up 200% and then I'll be happy. Because we only had 4,800 homes on. Look at that. 40, 46, 47. And when they all of a sudden went up to 66, everybody's going, oh, whoa. So Bebop, he's getting good data. So I'm definitely not going to push against his data, but I'm saying that we're up to 2022's numbers. So if you're looking towards last year, and that's that's the way real estate data works. Everybody says, let's compare it to last year. It's, okay.
Yeah.
And then how many months supply we have. We're going to start going over some of that because it varies by city. Now, I ran into this, talked about this a little bit with you, Pat, and said, talking about national house price to national average wage index. Okay. So it's saying the national average wage index increased to 66K, up 4.43 from 63 in 2022. And it says this was the third consecutive year with strong wage gains, and wages are up almost 20% over the last 3 years. But what I want to focus on that they said here was the last time we saw a 3-year wage gain this high was in the late 70s and early 80s. I remember that well. Another reason to compare the current housing cycle to back then, 78 to 82, and not the housing bubble and bust. So it's definitely, it underscores, said, look, compare it to here, that most of the numbers that we see match up to what we saw in the late 70s versus what we saw in 2006, 2007. So more like 50% according to Cromford. Yeah, it's a moving target. Judy, hello. And then here we are. I want to take a look at this. And this is where I want to kind of have some fun city by city here, Pat. This is Mesa's average sale price.
This is fun for you?
Oh, man, I'm telling you. Yeah. Yeah.
I know. I don't see a beer in your hand. Or,
I get into a different zone when I get on here. Then I go have fun.
Yeah.
So
Then, yeah.
I just pretend I live for this. I've been called a geek too much lately. Mesa compared to Chandler. Mesa's a dark one. You can see that Chandler's more expensive. But let's compare Gilbert to Chandler because they're neighbors. And since we're neighbors, let's be friends. And let's see. Let's go here. And boy, they're just right about there, aren't they?
Yep.
You got, average 695, average 695. I mean, that's so, what difference does that make? Compare Gilbert to Buckeye. Buckeye is where the bargains are. There's 460. Gilbert is again in the high sixes.
Do Scottdale and Chandler or Gilbert. Just curious.
Okay, I can only do two at a time, but let's do Scottdale.
Oh, no, Scottdale, yeah, Gilbert or
Gilbert. And come on, Mouse, you can cooperate here.
Is this a new graph that you found over your weekend geek time, or?
No, 2 cups of coffee, and I dove into this morning. So
wow,
I do my show prep.
This is exciting.
Several hours earlier for Thursday. Yeah. On the mornings when I do my lives, I give myself about 40 minutes. And so I'm a little more zoned in on this one because I got to keep up with you.
You and Elon Musk ought to get together sometime. You would have a blast together, huh? Geeking out on everything.
Well, if we can just talk internet connection. So here we are, average sales price, 1.5.
But I mean, this is what I was talking to one of our viewers, that we're working, Jason, and he said, talking about, he's moving here from New York. And, I mean, that kind of shows you the discrepancy between, I think, I've been here 37 years, and the value. How much value do you get really in Scottsdale's a great area, don't get me wrong, but dollar for dollar, do you really get the value?
Yeah, they've got nice views in Gilbert too. It depends. I mean, it's hard to roll Scottsdale into a little ball.
Yeah.
You've got North Scottsdale with the
South Scottsdale
desert views, South Scottsdale more of an urban, northeast Scottsdale with the views. So it just all intertwines. And then you've got, so let's have fun with this, talking about comparing. Let's go to Paradise Valley. And even Paradise Valley as a boundary, Pat, it's the very high end, and then it kind of scoots over towards the 51 to what I'd say the low end. But because they don't have that many sales, like here's one week where the average sales price was 7.7 million. Then the next week it was 4.1. So compared to Scottsdale. So those are interesting. So let's jump away from that for a minute. And in the chat, if you want me to look at another city, let me know what you want to see. Pending listings. Where is the city that is getting the most pending listings? Because we looked at the average price.
Mhm.
And right now you can see that it looks like Chandler's winning that total. 256 compared to.
No, it's Mesa. Mesa. Was it
What is that?
Chandler's
Oh,
purple?
that's Mesa. Okay.
Yeah.
Let's see what I got. Apache Junction. Which one's what? Trying to figure out which color's what here. I threw myself off.
I can tell
Talk
you.
amongst yourselves. So we can go to Chandler and Sun Lakes. They're neighbors.
Yeah.
Okay. Sun
Well,
Lakes 200.
that's surprise. You got surprise. You got surprise up there.
Oh shoot.
You gotta get your eyes checked.
Yeah.
Besides everything else.
Last time I checked, I still had both of them. Sun Lakes. There we go. Now there's Sun Lakes. What's interesting about that, the snowbirds start showing up, and some of them come down and rent temporarily to find a place to buy.
Yeah.
But their journey down here is going to be delayed by a couple of weeks because they're going to stay home and vote and then come down.
That's right.
We've seen that a lot. So
yeah, good point.
Pending listings in Phoenix. And let me not put in a comparison city for a minute. It is showing that our pending listings, as expected, are way down. I mean, it's slow. Again, 2,500. And compared to what we were seeing back here in the silly season, not a whole lot going on there. Active listings in Phoenix have been climbing. Active listings in Buckeye climbing, but not as much. We're seeing that Chandler has climbed quite a bit, actually. Fountain Hills, kind of flat. But they get that way until, seasonally until about January, February, and you start seeing more listings show up. We'll look at Gilbert here. Slight uptick. I haven't found a city that's really jumped way up there in active listings. But they're all hugging right about by 2022 levels. John's asking if I can do Vistancia. Unfortunately, John, it doesn't let me break it down.
That's Peoria. That's Peoria, isn't it?
Suburb like that. But yeah, I can look at Peoria. They've had a pretty healthy spike in inventory this year. But again, it mirrors 2020, 2022. I mean, we're following 2022 to a T. We've got question here. Scottsdale active listings, please. Seeing a lot of condos for sale. So, well, people are getting ready to sell their condos, getting ready for next year for the winter visitors. So let's look at Scottsdale. I can probably, again, 2022 levels. I can probably break it down in another chart here if I can find by type. Let's see, active listings. Yeah, let's take a look at this for just a moment, and we can compare to why did we see a huge jump in 2022? Was this when Zillow and Open Door were dumping homes? Yes. Zillow wasn't dumping that many. They had already burned through theirs. They were quick to lose their 600 million. And then Open Door panicked when the rate increase came. Okay, so this is another look at listings by weekly count. Let's just look at condos and see if they're outpacing any other years. That's just total. And let's go to, it looks to me like they sure have. If you look here, this is last year's number. Here's 2023. And where's 2022? Right here. No, it's 2020. What do we got here? 2021, 2020, 23, 22. There we are. So we're beating last year. Let's see if it is indeed Scottsdale. It's like a game show here. Okay. Yeah, they're blowing the numbers out in Scottsdale, about 756. So that's I don't know why. I mean, I know Scottsdale is tightening up on Airbnbs. Perhaps there's some of that. What do you think, Pat?
Yeah, I saw an article a couple of weeks ago saying that it popped up on Arizona Central, I think, or something. Yeah, pretty sure that's where it was. Saying that they're cracking down big time, I guess, on Airbnb.
Yeah.
You know,
And with those condos up there, they're a problem because they're you never know who your neighbors are. They're partying like crazy. They're supposed to only have 4 people in there. Now they got 12.
well, you got such a
Parking's a
mixture.
problem.
Yeah, I think in Scottsdale you've got, it's an obviously an upper income area in general, and you've got, I think, in general, you have people that if they got a condo, let's say, that might be their second home from Wisconsin or Wisconsin, Illinois, Michigan. And they're maybe semi-retired, retired, and then you got 2 doors down, you got an Airbnb where you got 12 guys hanging out for the bachelor party.
Yeah, and the problems are not only the parking in the residential areas like Arcadia, but just the noise. And
Yeah.
so now they've got rules out there for Airbnbs that you have to have a local contact and phone number registered with the police department so they can get a hold of you. And if you have a complaint, after your third complaint, you're losing your license to have your Airbnb. And some people are trying to get away by not having a license, and it doesn't take long for somebody to catch up with you on that one. Thought I'd look at price.
Hey, Bebop, I know you're 25, so I mean, rank. Condos are definitely it's a good way to get into the market. I mean, if you can, there's also the town, there's a lot of townhomes out there too that kind of have the same, characteristics of a condo, but townhomes will be priced a little bit differently and looked at differently from a lending standpoint. If it's in the CC and ours as a townhome, the problem with condos and townhomes sometimes are mixed up. They say they're a townhome, but in the CC and ours are a condominium, so you have to finance as a condominium.
Yeah, it's a mess, and we don't like
condos are.
Yeah, they're not fun. Average list price per square foot. I've shown this before, and I just want to show it again. When you can see that here we are here at 352. We started out the year at 368, so we went up and we came down. But that's everybody. When I take out over $1 million, it just shocks the living daylights out of me because it's just flat.
Wow.
Flat as a pancake. Now, let's look at condos. Okay. What is going on with list pricing for condos? Flat, under $1 million, which, there's a few condos over there that are above $1 million, but probably not enough to change that. But the asking price for condos has not changed.
What?
And so
weren't the crash bros about 4 years talking about a 30 to 40% decline about 4 years ago?
Yes, we're still waiting.
Yeah.
In fact, Reventure Consulting was actually quoted on Yahoo Finance on an article I saw yesterday, and he was saying that we are 40% overvalued more than 2006. Okay.
Yeah, we are. Yeah,
I want to know what overvalued means, and I want to know how that even correlates into a crash.
Well, they've been saying if you apply the same logic, I mean, California's been overvalued for the last 30 years. It's been unaffordable for the last 30 years. I mean,
so was Boston.
I mean, in New York. I mean, you see these homes in California. A $9 million home is about a $300,000 home here.
I get it. I mean, we have an affordability problem. There really is. There's a severe affordability problem, but it doesn't just go away because there's an affordability problem. The market dynamics change. There are still homes selling. They're selling in the 800,000 range and $1 million range. They're still going up. We're getting hurt in certain price points. But the thing that I really want to get sellers to understand that's changed in this market is remember that buyers have been slapped around a lot the past 2 years. 3 years, quite frankly.
Mm-hmm.
And they're not in the mood now to they look at your list price as a suggestion, unless somebody else is coming in and writing up a contract on that same home, the odds of you getting that list price are pretty slim. And so, and then when it comes to inspections, they're not as lenient as they once were. So sellers, you have to understand the buyers that are coming to you now, if they decide that the repair list that you gave them, that they gave you, and you don't agree with enough of them, they have no problem moving on to the next home. Because now, unlike a couple of years ago, there is a next home.
Oh yeah.
And so we've gone from, wow, sellers are so stingy and so greedy, to now buyers are asking for the sun, moon, and stars. Well, we're in a balanced market now. So we have to start acting like that. We have to start understanding buyers are going to ask for things. Sellers need to contribute some things. Meet in the middle. Where's that concept been?
Yeah. It's going out the
Have
window.
a civil conversation with the other agent. You may not have liked our offers. Let's talk about it.
Yeah.
Let's see if we can find something that works for both parties.
Yep.
There's nothing worse than an agent going, it's ridiculous. Well, calm down.
Yeah. Yeah.
You're representing a seller wants to sell the house, right? Okay, let's talk. I actually sent you a contract. We have a vested interest.
Yeah.
Don't kick it to the curb.
Well, there's so many, you and I have seen that, where so many, basically you got the egos of the buyer, the seller, the buying agent, the selling agent. You got these, and that's where it comes in the play, where you've got experienced listing agents and buying agents that like, hey, it's a negotiation, because you can get some people that go off the rail. Like you said, a couple of years ago when you had, we talk about, people say it's a good time to buy. From my standpoint, things like you said, things are balanced. You're not going up against 15 other offers right now. But back, 2 years ago, if you were a buyer and you had repairs, the sellers were like, take it or leave it.
Yeah.
If you don't want this house, I got 15 other people right behind you that are going to buy this house.
Mm-hmm.
But like you said, now it's kind of shifted to the buyers like, hey, I want this fixed. I want this fixed. And sellers have got to shift. And it takes some time. That type of shift in sentiment and thinking doesn't just happen in 1 week or a month. It takes time. It's like kind of like when rates move from 2, 3 up to 5.5. We saw that stall. And all of a sudden people are like, okay, 5.5, 6. Okay, it takes time for the sentiment to kind of trickle down into the market. But yeah, you're right though. I mean, buyers, they can take their time and they can talk to their wife. Husband and wife can talk like, hey, what do you think? And it definitely is to their advantage.
Well, we used to have to say, if you got to go home and sleep on it, you might not get to sleep in it.
Yeah.
Now we go, hey, take a few days, talk it over.
Yeah.
And then after you have the inspection, let's take a look at what your want and wish list is, and say, okay, well, let me present this to the listing agent, and the listing agent needs to take that with a grain of salt and go to his seller and say, okay, this appears to be a long list. Let's take a look at what we can realistically do and you can afford, and give me something that I can take back to the buyer agent. And then they'll probably go back and forth a couple times. But when it comes to writing the offer, and look, repairs are where most inspection periods, where most deals go to die, because it's very emotional. But getting that price that you want is also, it's a very delicate dance sometimes. I want to write them something really low. Okay. And you just wait for it, because some of them say, they're very courteous. They call you on the phone and go, hey, Rick, I really appreciate your offer. Boy, we're far off. Where do you think your client can come in? And then my answer is, well, that was a low offer, but you never know. Sometimes people take it. Give me an idea where you think your client would like to land on this one. Let's talk about this for a little bit. That's a great civil conversation. It's not a war. That agent wants to sell it. I want to find a good price for my buyer. An out and out rejection to me is the real insult.
Yeah.
Not the low price offer.
Do you think now, obviously with the buyer, you were talking just recently before we got on about the buyer commission and how that might roll into it too?
It's playing into it when it shouldn't.
Yeah.
It's, the lawsuit was that we were all colluding. Well, now you get on the phone with them and you say, and we knew this was coming. You say, hey, are you offering a buyer broke? And then they say, well, it depends. If you're giving us a full price offer, we're offering 3%.
That's
Anything below
colluding.
that, we will adjust the offer of compensation.
That's real collusion right there.
Mm-hmm. So now you're going, I want my client to have the house. So I can make sure my client has the house if I make less. But we also have to have an agreement with the buyer that says, here's what I charge.
Yeah.
So if I'm offered more, I don't get the extra. The buyer does. So let's say my fee is 2.5 and they offer 3 and we enter into a contract and we close, I get 2.5, the 0.5 gets credited to the buyer. So we both have an incentive to hope that the buyer compensation is higher, but I don't like the tiered nonsense that we're seeing going on there, especially in some of the back and forth that goes on verbally, and it didn't clean things up.
No,
It's not helping the buyer yet.
no,
It's
it's
getting
not.
messy, and I think it's going to bring around a few more lawsuits before it sorts itself out. And I'm
Oh,
no
no doubt.
lawyer, but when the guy that brought that, Sitzer came out with that website that it's a flat fee website. It's the most ridiculous thing you ever see in your life. None of it works unless he uses realtors. Well, what realtor is going to be dumb enough to partner with the guy that sued us for billions?
Yeah.
Not me.
You can't make
Only
this
help
stuff.
you.
You can't make this stuff up. I swear to
No.
God.
It's just insane. And the way that he put this website together and stuff, it literally illustrates that he understands nothing about a real estate transaction. And I look at that and I go, NAR couldn't beat this guy? So I don't know. It drives me nuts. I want to show people this. I just want to remind people, because you and I found out some things this morning on this, and we've got our form here where you send us the name and email. And if you've got a property eval from us, let us know what you think of it.
Yeah, I'd like to get your feedback to see how that report works out for people. If they get good information from it.
You put your name, email, address, include the city, and then we send you a report. But what we found out was if your home is less than 2 years old, we can't pull any data.
Well, it just depends on the day. If it's new construction, yeah, it might be that. Plus new construction, new areas because they pull data. It's basically kind of like an appraisal as far as comps. So, but in this report can be pulled in. If you got a property in Illinois or Wisconsin, I can pull the property pretty much. It doesn't just require Arizona.
Yeah, you don't have to limit it to here. Just if you want it, let us know and we could send. So, and the way we do it is I get the emails. I send it on the website. It comes to me, and then I just forward them on to Pat, and he snaps his fingers and gets it done. So I've enjoyed looking at him. It gets a lot more detail than you will on your Zestimate. Now,
I like the way
it's a number, but we haven't seen your kitchen. We haven't seen your bathrooms. It's just a number. But
I think it puts it in a nice logical way. There's 5 to 6 pages. It's real clean reading. And, it might be, if somebody's got, a property that they're in currently, or for a property that they're looking to buy, I can pull the report up for. If they got investment properties, they can send me, they can send us, a couple addresses. We can pull it up. So it's, I think it's been very helpful.
Here's an example here that you did for us. And it gives us a range of, it says here 434, gives you a range of 397 to 472. Then it just provides all this detail. Here's the similar comparables in the past year. And then it gives you the list of them. It shows you the listings in your area, which would be your competition if you're listing, and just goes into a lot of nice detail for you. So so let us know if you've got one of those, if you felt that was helpful. The other thing I want to show people today, especially anywhere in the United States, if you're following the sun, it's got a lot of activity, and northern lights tonight are supposed to be spectacular all the way down into Utah, Colorado, Kansas, and this red area. And then this area here says, you could see the northern lights with the naked eye anywhere here tonight, or you can photograph them down in this area deep into Arizona. And I've seen some pictures from Sedona from last week that were spectacular.
No way.
Yeah. So if you can get outside the city lights, like maybe even Lost Dutchman State Park or North Scottsdale. I don't know what time it is, but it's pretty cool. And it's a huge, severe geomagnetic storm. It'll interrupt some of our GPS. So, realtors tomorrow, you're out showing homes. If you can't find a house, that's why. And I pull up a phone app on my phone, because when I was in Washington State, I was trying to catch the northern lights because there was some going on. And this phone app shows in red where the geomagnetic storm is hitting right now. And you normally don't see it there this time of day.
Oh.
That will continue to sink even lower as we get into the evening. And so it's coming, and it's pretty cool. So something to do. And stay away from I-10 and like Queen Creek area, because the vice president's going to be speaking at Rawhide at 6:30 tonight. So traffic is going to be an absolute mess down there.
Oh, really?
If you live in Maricopa, maybe have a late dinner tonight, because
who's coming in town?
Harris.
Oh, Harris is here? Oh,
yeah,
wow.
She's going to be here at 6:30 coming in Vegas, and there's an event at the Rawhide pavilion out there. But from what I understand, I-10's already backed up. Now, if you're watching this on Friday, you won't care. So
yeah.
Hey,
just a quick note too, that you talked, we're going to try to get, you want to mention about our guest next week, possibly? We're going to try to.
Yeah, you teed that up. Go ahead. Let us know.
I've got this gentleman. He's a vice president for Michigan Mutual. We're going to have him on I think for about 15, 20, 25 minutes. He's going to go over home renovation loans. Michigan Mutual is kind of in the broker side, they're excellent. They pride themselves on the renovation loan. So he's going to go over, I'm going to ask him, I'll give him some bullet points to go over the do's, the don'ts, on a renovation loan, the home style loan, the 203K, the home style loan is the conventional side for renovation loan. So we're going to get him on for maybe hopefully 15, 20, 25 minutes to go over the process in a home renovation loan. And, it's one loan that's really not talked about. And it's a loan that, quite frankly, brokers don't do, for the most part, majority of them don't do a lot of them. They're kind of an interesting little animal. I mean, you can, buy, if you see a fixer upper, a lot of people that buy homes now want walk-in ready, but, you had said this a couple of years ago that, the generation wants a walk-in ready house, but you can actually grab, some equity. If you see a house that's beaten down, it's got green shag carpeting and, orange cabinets and, orange sinks like mine. I'm just kidding. But
yours are orange for a different reason. So.
Yeah. But I mean, this home renovation loan, you can, I'm just throwing an example. Although you might see a house that been on the market, nobody wants it, but it's kind of an ugly duckling. But you might be able to pick it up for $350. But if you put 75 into it, you might be worth 500. So you can grab some nice equity by using this renovation loan. There's some work involved in it with the contractors, and like I said, we're going to have. I forgot his name, but he's from Michigan Mutual. We're going to hopefully have him on to go over the renovation loans. He said maybe go through the do's and don'ts and some of the pitfalls, but maybe just freshen up people that might be, just something new and interesting.
Yeah, that'll be interesting, because there's a lot of people that are staying put, but they probably want to remodel their home. They don't know how to finance it.
Yeah, so, and we haven't confirmed it yet for next week, but that's what we're shooting for. Is I told her, that 5:00 Arizona time, they're back east in Michigan, so hopefully we can get them scheduled on for next week for, hopefully have a surprise guest.
Well, Jessica and I are going to try to make it out to not Casa Grande, but Apache Junction area and look at that new Blossom Rock development tomorrow and film that. Of course, it all depends, because sometimes your phone rings in the morning and your plans go poof. So,
yep.
So we'll see, but that's our plans, and that'll get inked out next week. And so anyway, Pat, have a super weekend, and I'm going to try and stick my neck outside and see if I can see the northern lights. I was just talking to my brother up in Washington, and they're supposed to have clear skies, so he's he's looking forward to that. I've had friends send me some incredible pictures from the Seattle area, which you wouldn't think you'd see anything, but this is it's they call it an 11-year cycle. So the geomagnetic storm is headed right towards us, and so go outside and get a geomagnetic tan tonight. So
maybe on my 11-year cycle with my dating life too. Probably sounds like it.
yeah, it's all affected by it's the same
Yeah.
thing.
Yeah,
There's
exactly.
charts for that, so I feel for you. So, all right, Pat, have a great weekend. Thank you everybody for participating and watching. Take care.
Take care.